Welcome to the deep dive. Today we're really getting into something interesting, a new report from Coinshares.
That's right. It's all about Bitcoin's hash power, basically the network's computational muscle.
Exactly. And we have the report right here. Our mission really is to understand this prediction they've made about hitting 1 zettahash per second.
Which is a mind-boggling number, frankly.
It really is. So we want to figure out what that means, for the network, for security, for the miners. And they even draw this comparison to gold mining, which sounds fascinating.
Yeah, that part's quite intriguing.
Okay, so let's dig in. What's the headline figure here? This 1 zettahash. When do they think it'll happen?
Well, the report is pretty bold. They're saying Bitcoin's hash power will likely hit that 1 zettahash per second, or ZHs, marked by July 2025.
July 2025. That sounds soon.
Yes.
Much sooner than people were thinking before, right?
Absolutely. It's a significant acceleration. Just looking back at late 2024, the hash power reached about 778 exahash per second.
Right, 778 EHs. And even that was higher than Coinshares themselves had projected earlier, wasn't it?
It was. Their earlier forecast was around 765 EHs, so the network was already outperforming expectations then.
So what's pushing this growth? Why is it happening so much faster?
The report really puts it down to the strong performance of Bitcoin's price, especially through 2024.
The price action. Makes sense.
Yeah, that upward trend, it basically gives miners a stronger incentive. It makes deploying more hardware, these specialized ASIC miners, more profitable, so they ramp up faster.
So a higher price encourages more investment in mining rigs, which directly boosts the total network hash power. It's like a positive feedback loop, sort of.
Pretty much, and Coinshares doesn't see it stopping there either.
Oh, what else are they forecasting?
They project continued growth, maybe reaching 1.28 zettahash per second by the end of 2025.
Wow.
And potentially, they even suggest maybe 2.0 ZHs by early 2027.
2 zettahashes. It's hard to even wrap your head around those numbers.
It really shows how dynamic this whole mining ecosystem is, very responsive to the market.
Okay, so let's step back. We have all this computing power flooding in. What does that mean for Bitcoin itself? Why is reaching 1 ZH such a big deal?
The number one benefit is security. Network security and resilience.
Okay, break that down for us. How does more power equal more security?
Well, think about what it would take to attack the network. A 51% attack, right? Where someone tries to control the majority of the hash power to, say, reverse transactions or block new ones.
Yeah, the nightmare scenario.
Exactly. The higher the total network hash power gets, the more computational power an attacker would need to even attempt that. Reaching 1 ZHs makes the cost and logistical challenge of mounting such an attack, astronomically high.
So it just makes Bitcoin even harder to tamper with, more trustworthy.
Precisely. It strengthens the integrity of the ledger significantly. It's like adding more and more locks to the vault.
And the report also mentioned what this implies about the miners themselves.
It does. Think about the investment required. These aren't cheap machines.
No kidding. Significant capital.
Right. So seeing this level of sustained investment, this rapid deployment of hardware, it signals pretty strong confidence from the miners.
Confidence in Bitcoin's future.
Yeah.
And their ability to make money doing this.
Yeah, confidence in its long-term viability and their own profitability, even with all the, volatility we see in crypto markets.
Okay, that leads perfectly into the miner economics. The report talks about hash prices. Can you explain what that is for listeners who aren't miners themselves?
Sure. Hash price is basically a metric. It measures the expected daily revenue for a specific unit of hashing power. It's usually quoted in dollars per petahash per day, so PH day.
Got it. Like how much you expect to earn for running a certain amount of computing power for a day.
Exactly. And what's interesting is, while Coinshares noted a small recent rebound in hash prices, their overall prediction is actually for a gradual sort of structural decline over the next few years.
A decline. But wait, you just said miners are confident and investing heavily, and the network power is soaring. Why would their earnings per unit of power go down?
It seems counterintuitive, right? But it comes down to two main things: hardware efficiency and competition.
Okay.
So, first, the technology keeps getting better. Manufacturers are constantly developing more powerful mining machines, ASICs, that can do more hashes using the same amount or even less electricity. More efficient.
Right. Moore's law for mining almost.
Kinda, yeah. And second, as more and more of these super efficient machines come online globally, the total network hash power increases, like we've been saying.
Which we established is good for security.
It is, but for the individual miner, it means the fixed block reward the new Bitcoin created gets split among more and more competing hash power. So your slice of the pie gets smaller.
Ah, increased competition. So even if the Bitcoin price is stable, if loads more efficient machines join the network, your individual earnings per petahash can drop.
That's the dynamic. Coinshares expects hash prices to kind of bounce around between, say, $35 and $50 per each day through this current halving cycle up to 2028.
But trending downwards overall.
Yeah, they project the average might fall below $40 per PH day by early 2026. So miners are in this constant race upgrading hardware, finding cheap power just to stay profitable against that rising tide of global competition.
It sounds relentless. Very different from, say, traditional commodity extraction. Which brings us to that gold comparison Coinshares made.
Right. This was a really interesting part of the report. They draw this parallel based on the fundamental idea that both Bitcoin and gold introduce new supply through mining.
Okay, that's the core similarity. Both require effort and resources to bring new units into existence.
Exactly. And that leads to some shared economics like cyclical patterns tied to prices, the need for big capital investments up front, and crucially, a reliance on energy.
But the how is totally different, obviously.
Completely different. Gold mining is, physical, finding deposits, getting permits, using massive earth-moving equipment, processing ore.
Boots on the ground, literally.
Yeah. Whereas Bitcoin mining is purely digital. It's a computational race. Specialized computers, ASICs, running flat out, burning electricity, connected to the internet, all trying to solve complex math problems to validate transactions and earn those new coins and fees.
So, physical extraction versus digital computation. And the report says this difference leads to different dynamics.
It does. They point out that while the cost of mining underpins the scarcity for both, Bitcoin's scarcity comes from its fixed code and that intense mining competition, while gold's comes from, well, geology and how much is physically in the ground.
Makes sense.
But Coinshares describes Bitcoin mining as being much more dynamic and unpredictable compared to gold mining.
More unpredictable. In what way?
It comes back to that global competition factor we just discussed. A Bitcoin miner's revenue isn't just about the Bitcoin price and their own operational efficiency.
Right. It depends on what everyone else is doing, too.
Precisely. Their share of the global hash rate is critical. If a huge new mining farm opens up somewhere else in the world with super efficient machines, your individual output and revenue can drop overnight, even if you haven't changed a thing in your own setup.
Wow. So that constant external pressure from global competitors is much more intense than what a typical gold miner faces.
That seems to be the argument, yes. Gold miners compete, of course, but it's often more localized, tied to specific deposits and permits. Bitcoin mining is a single, global, real-time competition.
Okay, so let's try to summarize what we've learned from this Coinshares report. It sounds like Bitcoin's engine, its hash power, is accelerating rapidly.
Definitely. On track for that one Zettahash milestone, potentially by mid-2025.
And that's a huge plus for network security, making it incredibly resilient. It also shows miners are, well, pretty bullish, investing heavily.
Bullish, yes, but facing headwinds too.
Right. Because despite the network growth, the actual earnings per unit of hash power, the hash price, is expected to face downward pressure.
Driven by improving hardware efficiency and, crucially, that ever-increasing global competition.
And the comparison to gold mining really highlights how unique Bitcoin mining is: digital, fiercely competitive, and incredibly dynamic.
That captures it well. It's a fascinating look at the mechanics and economics powering the network.
It really is. And it leaves us with something to think about, doesn't it? For you, the listener, considering how fast Bitcoin mining evolves, driven by tech, how might future innovations change how digital assets are created, compared to digging stuff out of the ground?
Yeah, what other parallels or maybe even stranger divergences might pop up down the road as both digital and physical resource extraction keep adapting?
Definitely some food for thought there. Thanks for joining us for this deep dive.